Hey guys, good morning. Happy Saturday. It is January 27th. All right, so I'm on FinViz, and today I'm going over mapping. And so, mapping is something I call where I am basically building um, a report to be able to go back and map and see if I can get a feel for a pattern with certain trading strategies. So, here on FinViz, if you go up here to your the insiders tab, this is going to show up. And so right now I'm currently on the top insider trading for the recent week, and I have it select on a filter for all transactions. And so if you see, the first one is basically Salesforce, right? And you're going to see it's going to give you the relationship, of course, the owner, relationship, the date, the transaction, whether it was a buy or sell, the cost of when that sale occurred, how many shares were sold, and the value of it. And then it's going to also talk about how many total shares that they own. So, for instance, if we go down to this Deutsch, you would see that this individual owns 691 million total shares. But at the time, they sold 194,910 shares at $165. All right. And so that the value came out to 32 million basically. Okay. So I'm just going to go through a few of these, but what I want you guys to do as well is to do a similar exercise today. You're going to go through, you're going to look at some of these, and you're going to go back and you're going to map. So I'll show you a little bit about what I mean by mapping. All right. So, and some of this data is going to be delayed. So, for instance, when they bought and sold, often it's delayed because of the reporting. So it's not like it's in real time, but we still can go back and map, and we can see how price is reacting around those particular, levels or whatnot. All right, and then the SEC Form 4, it has to be filed whenever insider is making any trades. Okay, so let's go look at, and I'm on a daily chart, so we'll look at Salesforce. All right, let's go back. Let's look. So we're talking about the 19th. So this individual, Brian Milhan, sold at $280. All right, so we can do something like this. So that's around 280 area, and of course that's not the day, but this is the region of it. Now, here's one thing I'm going to start looking for. I want to see how prices reacted every time these sales are starting to happen. And I'm already seeing something that's standing out to me. Like, for instance, he did an options contract and he sold at 240. All right, um, the price was at 240. Right, so let's go back. So possibly with this gap up, this individual might have had a sale executed within this region. But here's the thing. Already I'm seeing something. When the insider is selling, you would probably think that, hey, maybe I need to sell. No, maybe you need to buy. Maybe you need to look for some long positions if you're doing option contracts, whatnot. But you should be looking, you should be doing the inverse. Okay. And here's the reason why. They're selling is because there's some liquidity that has come into the market. Something is pushing it up for them to sell. Okay. And then if price is going down, more than likely they probably are buying. So when you look at someone who's buying and you look at the chart, you're like, well, why are they buying? But the price keeps coming down as well because they need liquidity and they're not going to get filled at every level. So they're probably dollar cost averaging as price drops. So already I see that for whatever reason, there's some buying happening. We had buying something, of course, blasted through, but when you have these gaps, there was a lot of unfulfilled orders that was left in this area as well too. But look at this. Even though there's some selling coming in, there's something stabilizing. See how it's still trying to fight to get back up. So there was some support that came in up here at these levels, even though there was some selling pressure coming in. Yeah, we got 2 days and then we got a little sideways and then we start to try to fight back up here. So there's some action going up, and then we have some decent support line right here that's happening, which is nothing but a retest of market structure that we can see clearly that's happening right here. All right, so we get a break, we get a retest here. So we could be fighting to try to see if we could get higher. Also, because we're dealing with Salesforce, um, there's something we need to consider as well too, is that you can do a historical analysis and you can see how do Salesforce historically perform during the first quarter of the year, where you have a lot of employment increasing, um, just the fiscal years are shifting. Salesforce deal with a lot of employers with database management systems. So that's something to keep in mind as well. And that's something that we do too as far as historical analysis, is looking for those particular patterns that particularly happen each year. So that's a whole nother lesson in that. All right, so let's move on. Let's look at some more. All right, so Netflix. All right, so they had a sale. Supposedly, the date was on January 24th at 550. All right, 47,000 shares were sold. This person bagged 25.8 million basically. They own 431,000 shares. Okay, so let's go look at Netflix. What do you notice again, right? All right, let's look again. Where did they sell at? Price point was at 550, and we're at 570. Okay, so of course they sold somewhere in this area. But what are you noticing again? You're noticing that price is turning what? Bullish when they're selling. So that means they know that something is here, and we know that insiders got way more information. Of course, the insider trading is illegal, but there's ways around that. I'm not going to sit here and sugarcoat that. But more importantly, I mean, these guys also can coordinate with these big, huge pension funds. These Roth IRAs, 401ks, and you know, look, guys. I mean, almost every market on the planet is almost like a pyramid scheme. It is what it is. You just got to know how to take advantage of it, right? So the people who are helping everyone else retire, all the baby boomers that are retiring, they're retiring is because you got all the people who are investing in the stock market and buying through these pension funds, these retirement funds, these teacher retirement funds. They are constantly, every pay period, they're buying into these stocks. But if they're buying, who is selling? So people don't want to talk about that. Who is selling? All right. So here we go. We look. These are people like these executives. These are people maybe that are literally retiring, and did their time in whatever industry, and they may have a little bit of Netflix in their account. And okay, then we have a lot of buying pressure because those guys got to get out. So essentially, this is nothing but exit liquidity. So we're moving up. But we can take advantage of this because now we can look to unload at some key levels based off those price movements. Okay. Now we clearly, of course, we know we have a gap strategy as well too. But you see these gaps are starting to be filled as we gap down lower over time. We hit Q, and I had a lot of these targets from the past. A lot of them was hit, but for the most part, yeah. Now, $570 on Netflix, the average person is not going to be able to afford that. It's not even worth it. Why would you spend $550 to make 570? That's not a significant amount unless you're using millions and hundreds of thousands of dollars to invest. So that's why option contracts will be very beneficial here. All right. So where we clearly see that with Netflix. Let's pick something that we probably don't know nothing about. Well, let's look at Meta though. Let's look at Meta. So we got Mark Zuckerberg. All right. He sold at 392. All right. He sold 19,000 shares and he got for $7 million basically. I'm interested in nobody that's not showing any shares for him total. But let's figure this out. All right. He been selling in the strength of this. So he sold at 384. So let's look at that one. Yeah, he been unloading a lot. It's well over 20, 23 something million something dollars. Let me see. January 22nd, and then it was at 384 for the Meta. So January. All right, so that was on Monday, and this is Monday. Where's Monday? Right here is Monday. Now, what do you notice? Even though there was a sale, so we was at a high that day of around $391, and then we dropped down to about 381, but then we recovered, and it was get back up here at 394. So we was able to even break whenever the sales started coming in from Zuckerberg. We still started to push up. So we still see right here that what when they're selling, we may be looking to what buy. Okay, we got to think about it. He's selling because he knows liquidity has come in the market. There's a lot of buyers in it. But guess what? If we could take advantage of that, instead of so for instance, what's happening now, we're looking back in the past, but what you want to do with your mapping is that you want to pay attention in real time. Okay. We want to be here. We want to be in these situations. Okay, in these situations here. We want to be and can see that okay, how do we take advantage of these areas, getting these gap ups and moving higher. All right. That's what we want to see to take advantage of this impressive growth. But now, we here, yes, we could be considered overextended for the most part. But yeah, if you do the mapping correctly, you would have been like, oh, okay, I saw that he also was starting to sell maybe in this area here, which is in November of 2022 or something like that, right? So you'll be able to see it. And then look, we got earnings. Okay, you want to look at the patterns of earnings. All right, whether or not how the price reacts against negative or positive earnings, and then are they selling around it? So you see how mapping can do. You asking these particular questions. And what I'm doing is that I'll just give you guys a little blank little template or something of to start thinking about. I don't want to put too much on your plate, but this something today. Just go through and start looking at how price reacts based off of it. So let's look at this a buy. So we got a ACET, ACET. Never even heard of this company, but anyway, what was happening? So we got Gordon Carr, he's the director. He sold at $2.40. I mean, he bought at $2.40. All right, and he about three million worth. Okay, so 240 buy. Oh, what date was that? So January 25th. Like a nice little cup and handle about to form on this. All right. So buying came in. All right, now check this out. Um, so remember now, so look, he's buying now, but look at the price action beforehand. All right, so you see we got a nice little pullback. So somebody knows something. All right, so look, it was up here at $3.78 something cents, 79 cents, and it dropped all the way down to about $2.30. He was able to get filled at 240 to buy. You see a cup and handle. So if I was taking this, looking at this, I'm like, all right, okay, we see a couple handle that's being formed. So we're probably looking at maybe what for bullish because we already have what the pullback that we were looking for, which is basically right there, right? Which just is the handle for the most part. All right, and there's two ways you can do this. You can measure it using your Fibonacci extension tool to get the upside targets. My computer was freezing right there. Let's see, try this again. All right, so these are the target areas that we'll be looking to get to based off this thing. And of course, these will be the top targets if it fights to get back up to these areas up here. And of course, there's other ways you can measure it. You can take the bottom of the base for the most part, take it up to the brim. Oh, I didn't mean to do that. Wrong one. I should be using this one. Bam. You do this, and then you can set it on top. So this could be also a target as well too, based off of measurement. But I like to use the Fibonacci extension tool to get the targets for that. Yeah. So yeah, we get a pullback, start to buy, and then what do you notice? That what I mean, remember what I said, right? I said you want to look at. So if this person is buying, you got to look at the price action. What do you notice? Why did they buy at this level? Why they didn't buy here? They're going to be way smarter than we are, guys, because they have information we don't. Why didn't they buy here? Because look what happened afterwards. They're not going to do this. They're not going to buy here and then get tore up. That's not what they're going to do. They're not going to buy right here and then get dragged across. So the question is, why are they buying here? But look at the downtrend. Okay, look at the downtrend for them buying. Look at what's happening with this particular stock. It was massive when it started in November of 2022, and then we just start to inch on down, 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 and then now we're moving sideways. All right, we break, we get out, but remember, we got to go back in time. If we so when you start mapping, you will have a better historical reference. But what if we find out that there was a lot of buying happening in this region? It possibly could have. We just don't have that data. But once you start mapping correctly, so for instance, you get all your mapping done for this week. Then next week, when the new data come out, you start mapping that, and then you'll start being able to see some type of correlation. Because we easily could go back weeks ago, and Gordon or whoever could have been loading at like $1 and some change. And then eventually you're going to see these names start appearing up here on these sales at a later date. And then you'll be able to map it and say, wow, okay, we was able to see that this person was loading at 240, maybe 140. And then now they're unloading at some of the levels that we had already screened up here at $7 some change or whatnot, or based off this. So what we're doing is we're using a combination of confluence, price action, fundamentals, and understanding what the insiders are doing. Nobody inside wants to be wrong. And if you think about what happened to the GameStop and the AMC fiasco, the reason why those insiders got demolished is because someone understood their position size and what they were trying to do, and then someone else or a group of investors basically is like, we're going to squeeze y'all. We know we're gonna artificially punt this as well. We're going to pump a lot of money in it, and that short squeeze caused all that artificial buying pressure on those stocks, and y'all know what happened after that, right? So, but these guys right here, they really doing this in silence, right? The average person's not looking at this data, so they're not worried about that. But essentially, if a bigger player wanted to, they could go in and like, oh, okay, I see you buying right here, but I'm gonna push you even lower. All right. And then two, we don't know how much of this is short squeezing. Okay. So guess what? Somebody could be shorting this stock all the way down. And then when it gets down here, remember, they have to buy back. If you short squeeze, you can't just hold it forever. You're gonna eventually have to buy it back. So if you buy back, you get it, you're gonna have that price is gonna jump. And that's essentially what a lot of times you're seeing on charts is someone shorting, then they're doing the buybacks. So all these buybacks is happening, but essentially it's nothing but short squeezes. So it makes it appear as if this is a true organic going bullish. Well, it's all the people who were selling up here who borrowed all those shares. They got to go back and they got to get them. You can see that all over. All right. Now, I don't want to keep this video real long. Like I said, hit the like button, subscribe to the channel and whatnot. But these are some of the things that we do as a contrarian investors. It's looking at various things that can give us a competitive edge in this ever evolving market. And so you got to be very, very, very smart out here. We can't follow the crowd. We study the crowd, but we don't want to follow the crowd because a lot of times they're wrong. And we don't want to do that. We want to slow down. We want to analyze things. And even if you detect a flaw in some of the things I went over today, that's part of it. Detect it. I post about it in the comments or whatnot. We're all here to learn. So some things that I may have missed or ill spoken on that I didn't know, that's just part of it. And that's why it takes a team, to do these things. I just feel like sometimes in this space, sometimes things can be a little bit selfish. Yes, a lot of this information can be learned for free. Just got to take time, but also it's not collaborated in a way that makes sense for a lot of people as well too. So a lot of people just all over the place when it comes to trading, investing, and they're rushing the process because why? Hey, inflation whooping a lot of people's behind. People want to really get out of debt. They want to get financial freedom quickly, but they think it's just like a easy, quick fix. When it's really all about being disciplined, consistent, and working on your personal development. All right, so that's that. It's your boy E White. Hit like button, subscribe. I'm out. Enjoy your day.